We know that the losers from last week's Federal Reserve rate hike far outnumber the winners, but there are still plenty of companies that instantly become more profitable with higher short-term interest rates, and I'm not just talking about the banks. Take Paychex, the country's #2 payroll processor that's focused on small and medium-sized businesses, which also has a strong human resources and benefits outsourcing division. Paychex sits on large piles of cash for very short periods of time, because there's a lag between the moment the company's clients fork over their payroll budgets and the moment you actually deposit your paycheck. And Paychex collects interest on that money, which is known as the float. But for years, rates were so low that the company's interest income was negligible. So the instant the Fed raised interest rates by a quarter point last week, the company suddenly became much more profitable for doing nothing. Frankly, their earnings will only get better if Janet Yellen sticks to her 4 rate hikes a year timetable, and if some of these other yahoos get their way, it could be 6. Plus, we know that Paychex was already doing well when rates were still incredibly low because the company just reported a solid quarter this morning, beating Wall Street's earnings estimates by a penny off a 51-cent basis, maintaining its guidance for the 2016 fiscal year. Oh, and let's not forget the company pays you a bountiful 3.2% yield at these levels. I'm a real fan of Paychex, have been for a long time, and the stock's already given us an 11% gain since the last time we spoke to the CEO in September. Don't take it from me. Let's check in with Marty Musi. He's the president and CEO of Paychex. Hear more about the quarter and his company's prospects. Mr. Musi, welcome back to Mad Money.
Hey, Jim, thanks. Good to be here.
All right, Marty, so when I was listening today to one of the Fed governors, he's talking about maybe 6 rate hikes. And the first thing I think of is, like, if I'm working at Paychex and we get 6 rate hikes in 2016, that's just gravy for you guys.
Well, yeah, every 1% increase is about $20 million on an annual basis. So this first quarter point is worth, on an annual basis, about $4 to $5 million, basically to the bottom line for us.
Right. I mean, what people don't understand, it is not like you're taking on more risk to be able to get that $5 million.
That's correct. In fact, we're very careful with the risk of that money. We hold just under about $4 billion of our clients' funds at any given time.
All right. Now, you've got, every time I see you, you pick up some new businesses because I think that the world of business changes. And you've got things that are involving flex time, time and attendance in the cloud. I'm wondering whether you're starting to actually see these businesses that are a part of the shared economy that don't really know how to handle their taxes, frankly, and have to go to somebody.
Well, certainly. And you know, Jim, that's part of our acquisition, too, Advanced Partners. You know, this is a business that supports temporary staffing companies. And we're seeing a big growth in temporary staffing and in part-time employment. And that's part of this sharing economy. And we think it's going to have great growth for us.
Now, I have to believe that a lot of these companies, I mean, look, we had Postmates on last week, and we know that there's a lot of Airbnb. I mean, look, if I rent out my house in Airbnb, I have to have someone who knows how to handle the taxes in that situation, or otherwise the IRS is going to call me. Now, I have to believe that you guys have figured out the taxes for those kinds of situations.
Well, absolutely. And the products that you heard of today, that we added modules to our bundle, our suite of products on the cloud, which include time and attendance and benefit enrollment and administration. All of these things in one suite on the cloud, a software as a service offering that is perfect for our clients, whether they're small or mid-size.
Now, how about the ACA compliance? Where are we? Because, again, as someone who has payrolls, all I care about is I don't want to knock on the door from the government, and I don't want to get any of my people in trouble, and I don't want to get in trouble. So, I mean, compliant, this is the year, right? I mean, next year is the year where you really got to get it right.
This is it, 2015. The filing requirements are due in the first quarter, and we saw a big uptake in the sales of the product that we offer that not only include monthly monitoring for clients, but also the filing. And we saw a big uptake on that. We have a lot of clients that have subscribed to the service, and we're now working through all the requirements that have to be filed in January and actually through the first quarter.
Now, at the same time, we're still not seeing the robust per paycheck that I would have thought. I mean, there are these cross currents, Marty, I've got to understand. Economy, you know, I don't understand how you wouldn't just start seeing immediately many more paychecks per place. It's just not happening. And much more and larger paychecks per place.
Yeah, that's true. That's been pretty flat. So what we're seeing is, you know, when you think about our small business index, you're still seeing growth in employment for small and mid-sized businesses, but it's steady and slow. So we're not seeing a big uptick in the number of employees per client. So it's about steady, it's flat, it's not down, but it's not, you know, increasing as much. However, new business startups are back up, and that's a good thing. We're selling to more new startups than we have last year, that's for sure.
And I know you do geographic work. Where are the most startups?
Well, I think you're seeing it in the South, around construction and home building going on there, and certainly on the West Coast as well, Washington State, and then Texas, Dallas in particular. Texas is a funny state. Right. Dallas, very strong for 4 years. Houston, hurting now with the energy prices lower.
Well, look, it's just a good story, and you maintain what I think is one of the best growth stories, in part because I think it's the great hedge against what the Fed might do. Marty Mucci is the president and CEO of Paychex. Good to see you, sir. Congratulations on a good quarter. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.